Assalamualaikum warahmatullahi wabarakatuh. Introduce myself. My name is Malvin Berliana Mirwal from my NPM is 224111025 from Management 228 class. Today I want a presentation about capital budgeting. In most companies, capital budgeting is one of the main sources of profit for the company because with capital budgeting they can calculate the level of profit they will get in the long term. Capital budgeting is a term that we often hear when dealing with money, but often the term capital budgeting is misinterpreted as a tool for calculating profit only. Even though capital budgeting is not just that, therefore we must really understand the meaning of capital budgeting so that the interpretation is not only limited to seeking profit but making investment decision that will have a good long-term and short-term impact on the company. In a company, a financial manager must really understand this capital budgeting is because the manager will decide the investment that can be invested to have a good impact on the company. In most companies, capital budgeting is one of main sources of profit for the company. Because with capital budgeting, they can calculate the level of profit they will get in the long term. Capital budgeting is a term that we often hear when dealing with money, but often the term capital budgeting is misinterpreted as a tool for calculating profits only. Even though capital budgeting is not just that, therefore we must really understand the meaning of capital budgeting so that the interpretation is not only limited to seeking profit but making investment decisions that will have a good long-term and short-term impact on the company. In a company, a financial manager must really understand this capital budgeting is because the manager will decide the investment that can be invested to have a good impact on the company. Capital budgeting objectivities. The first is know the meaning of capital budgeting. The second is know the importance of capital budgeting. The third is know the stage of capital budgeting. The fourth is know the benefit of capital budgeting. The fifth is know the approach to capital budgeting decision. And the sixth is know capital budgeting decision method. Meaning of capital budgeting. Capital or capital, so fixed assets or used for production. Budget is a detailed plan that project cash inflow and cash outflow over several periods in the future. It's the entire process starting from planning to making a decision to spend a certain amount of fund investment where the return period for the fund exceeds 1 year. In the book Business Budgeting by Gunawan Adi Saputro and Yunita Anggraini, it is explained that Gargaran is a planning process that includes analysis and selection of various capital investment in fixed assets, is invested funds that will be received back in full by the company over several years gradually. In installment through depreciation, not cash flow process, is the difference between the net cash outflow required for new investment and the net cash inflow as a result of new investment. Importance of capital budgeting. The first is capital budgeting decision will have an effect over a long period of time so that the company loses its flexibility. The second is effective capital budgeting will increase the timeliness and quality of additional assets. The third is expenditures are very important capital budgeting stage. The first is project cost must be determined. The second is Management must estimate the expected cash flow from the project, including the final value of assets. The third is the rest of project cash flow must be estimated using cash flow probability distribution. The fourth is by knowing the rest of project, management must determine the approach cost of capital to discount the project the project's cash flows. The fifth is using the time of value of money. The expected cash inflow is used to estimate the value of asset. The sixth is finally the present value of the expected cash flow is compared with their cost. Benefit of capital budgeting. The first is to find out more detailed funding needs because the funds are tied to a period of more data than 1 year. 2. The second is so that there is no overinvestment or underinvestment. The third is can be more detailed and short because funds are increasing and in very large amount. The fourth is prevent errors in decision making. Approaches to capital budgeting decision. There are two main approaches in making capital budgeting decision. These approaches are influenced by the company's financial condition. Accept reject approach includes evaluating capital expenditure proposals, so determine whether this proposal can be accepted or not. This approach is quite simply because it's only compare the criteria possessed by each proposal with the minimum criteria that have been previously determined. This approach will be very suitable for companies that have unlimited funds. Ranking project based on predetermined criteria. For example, project will be ranked based on their respective rates of return. The project with the highest rate of return will be ranked number one, and the lowest rate of return will be ranked last. First is payback period method. The payback period is the period required to recoup the expenditure on an investment using the net cash flow process of 10 kind. The first is very easy to apply. Indicate projects that require a long time to return capital. The second is measuring the liquidity of a project. If liquidity is an important factor for the company weakness. The first is not paying attention to the time money of value. The second is not paying attention to cash inflow after the payback period, so it cannot be used as a measuring tool. The two is new present value or NPV. Investment appraisal method that use discounted cash flow. Considering the time value of money in cash flow that occur now with cash outflow that will receive in the future. A formula where 10 investment value at net cash flow in period T. R is discount rate, T is time period, B is kind. The first is take into account to the time value of money. The second is take into account cash flow over the life of the investment. The C is weakness. The third is internal rate of return (IRR). The rate of return generated on investment on or discount rate which show the present value cash flow. Present value outlay (IRR) obtained compared by the capital cost borne by the company. The A is formula where is RK where RK is small interest rate, RB is large interest rate, NPFRK is net present value at a small interest rate. TPVRK is present value of process at a small interest rate. TPVRB is present value of process at a large interest rate. EFERR interest rate is used, the investment is accepted. EFERR interest rate is used, the investment is rejected. Divide the current value between future cash inflow received in the future and cash outflow. Formula is profitability index EFPE. 1. The investment or project is accepted. EFPE 1. The investment or project does not matter whether the project is accepted or not. EFPE 1. The investment project is rejected. Sekian dari saya mohon maaf jika ada kesalahan pronounce dan kata yang saya ucapkan dalam video ini. Saya akhiri, wassalamualaikum warahmatullahi wabarakatuh.